Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Wednesday, December 28th. We're seeing some modest losses to start the trading session on Wall Street. Volume is still extremely light, as many investors have decided to close their books on 2011 a little bit early. But the traders who do remain active are focusing their attention on Europe. Italy's Treasury conducted a successful bond auction this morning, selling 9 billion euros of 6-month bills. The sale produced an average yield of 3.25%, roughly half the rate that investors demanded to buy similar bonds last month. Following the sale, the yield on Italy's benchmark 10-year note declined, and it's now trading at around 6.8%. For much of the past few months, the rate has been above 7%, a level that most experts view as unsustainable.
The successful bond auction is helping stocks across Europe to some solid gains. Italy's benchmark index is leading the charge with an advance of more than 100 points. The euro had been holding its ground earlier this morning, but now it's starting to sink again, approaching the 130 mark against the dollar. And the yield on the 10-year U.S. Treasury note is dipping back below 2%. We continue to keep an eye on oil prices after a big run-up pushed futures above $101 a barrel yesterday. Crude has advanced for 6 straight sessions amid supply-side concerns, including reports that Iran is threatening to cut off shipments through the Straits of Hormuz if new sanctions are enacted.
Elsewhere in the commodity markets, gold continues to decline and is now trading at around $1,585 an ounce. The precious metal has now fallen more than 9% this month, and gold is now up less than 12% on the year. Separately, China's central bank is banning all gold exchanges, aside from the official one in Shanghai. Unauthorized exchanges have sprung up as bullion prices soared earlier this year. But China is concerned about inadequate management, irregular trading, and some evidence of illegal activity. Meanwhile, China's Shanghai Composite Index rebounded today from yesterday's declines, but most other Asian markets finished lower.
On the corporate front, we're keeping an eye on shares of Medicis. The drug maker boosted its 2011 profit forecast, but lowered its revenue outlook to renegotiated contracts. Right now, Medicis is dropping more than 2%. We're also seeing losses in shares of Cavium after the semiconductor firm cut its fourth quarter sales forecast. And finally, Gap could be facing a tough trading session. Reuters reported that a new survey from 4C found that the retailer ranked among the worst performers for online customer satisfaction. That's the latest from Weiss Research. Have a great trading day.